Hello and welcome to Beyond the Pivot, the podcast where we bring you honest, unfiltered journeys from Africa's entrepreneurs and innovators.
I'm Kabwela Malupande, joined by my co-host Martin Vitek. Each episode, we dive deep into the realities of building and growing businesses on our continent. Let's get started. This is Beyond the Pivot.
If you do not want to miss a beat, follow Beyond the Pivot on YouTube, Spotify, Apple Podcasts, and wherever you get your next episode. We also know that 90% of you who listen to our episodes do not subscribe yet, and do not follow our channels either. So please go to YouTube, LinkedIn, Facebook, Instagram, and TikTok and change it right now. If you follow us, rate episodes, and comment on them, we will make sure that more people will learn the stories of our guests and their incredible work. Today, our incredible guest and his incredible work on Beyond the Pivot is Max Cuvellier Giacomelli. Max Cuvellier Giacomelli is a curious, fashionable, and global leader in digital innovation and entrepreneurship across Africa. He is the co-founder of Africa The Big Deal, the leading platform tracking startup investments on the continent, and head at mobile for development at the GSMA, where he works to accelerate digital inclusion for millions. Max brings a unique perspective on how mobile technology, data, and startups can drive social and economic transformation. Today, he also invests in and mentors early-stage ventures, building Africa's digital future. So, welcome to Beyond the Pivot, Max.
Thanks for having me.
Max, that was a lot to take in the intro. So, what brought you at first to mobile technology?
That's a good question. I was just thinking it's been nearly 20 years now. But the journey began, I guess, when I left business school, and I didn't want to go and work for like one of the big consulting firms that also didn't want to do marketing or finance, which was like 95% of my class was doing. And then I ended up working for a small boutique consulting firm called Altai Consulting. That was born out of Afghanistan, doing consulting and advisory for like UN organizations around migrations and so on in the region, and then ended up working a lot with the mobile operator in Afghanistan, Roshan, and built a telecom practice. And that's what I joined. That was my first job out of school. It was actually not about Africa. But I was working on clients in Afghanistan and in Iraq, and in both cases, it was like based on ground data, listening to customers, and so on. And this is something that like I really took on to my next roles. And it's also the first time I was interacting with the development space, which ended up playing quite a big role in my career. I did that for a little bit over a year. It was intense, but extremely formative. And then I ended up joining Orange. For anyone working in Africa, in particular West Africa, they'll be familiar with Orange. I think today they have 18 or 19 opcos across Africa. It was more or less the same back then. And basically they had, I think a couple years earlier, opened a Techno Center, which was basically an innovation unit specifically for the African opcos of the group. That was based in Jordan, so still not in Africa for political reason. That's where it was based, but basically serving their opcos mostly at the time in like Western Africa and Central Africa. And that's where basically I started working with innovators within mobile operators across the region, trying to help them develop new products and services. That was 15, 16 years ago. So bear in mind that at the time there was no mobile internet or anything. It was still like about like emergency credit, trying to allow people to make a quick call even though they didn't have money, like balance on their account, or getting someone to pay for their call, kind of like a mini PCV service, if I can call it. But what I found really interesting was like finding synergies between the different markets and transferable stories and technology from what was happening to Senegal in Senegal to what was happening in Côte d'Ivoire, for instance. So I stayed with them, I think, just over 3 years, first in Jordan, then they moved me to France to just manage the innovation portfolio and trying to identify new products and services. And after that, that's when I joined GSMA now 13 years ago. And basically, for me, that was a great opportunity to combine both experiences. So one, building innovation, the other one more of like advising mobile operators, because the GSMA, is the trade association of the mobile industry. And I joined a unit called Mobile for Development, which is basically working at the intersection of the industry and the development space. So here I went back to what I'd seen from a distance in Iraq and Afghanistan and so on, and combining basically the private sector angle with the development focus. So I joined the GSMA to work on gender initially, and then I wrapped up the research project. Then I fundraised to launch an internal innovation fund. Then I took over the management of another innovation fund that was focused specifically on energy, water, and sanitation, and then took the role of head of M4D at the beginning of 2020. So that's my story in short. And just to go back to Africa, obviously, what M4D does is, I would say 2/3 in Africa and 1/3 in emerging Asia, as all the work focuses on low and middle income countries.
It seems like your entire 20 years career was around being one with the phone, but also innovating through the phone, innovating through the telcos and so on.
That's definitely the red thread through the past 20 years. Yeah.
So, and especially since you went before internet, to now everything is on mobile data, I assume. What do you think were the most groundbreaking innovations in those 20 years that like made your life easier? That whether it was working with gender or it was working in rural areas, whatever you think is that 2-3 things that changed the life of people most.
I mean, the first one is definitely penetration. When I started nearly 20 years ago, it was still a minority who had access to a mobile phone, let alone mobile internet, which in the beginning didn't even exist. So I think the ubiquity of the tool, I think if you look back, it's in terms of hardware, it's the hardware tool, if I can say, that just got to billions of people the fastest in the past 2 centuries of modern economies. So that was this ability to access and connect to the end user that really was a life changer. And the fact that it was working both ways. It was not just about pushing information and pushing services to the end user, which you can do through a TV or through a radio, for instance, but it was also about collecting feedback and collecting information from the end user that created that two-way. And I would say that probably the first one is that two-way stream in terms of communication directly with the end user. That definitely was an absolute game changer. The second one, in particular in Africa, was mobile money. And technically, the first examples of mobile monies were outside of Africa, but it's really where East Africa in particular is really where it grew and developed into what it is today. And here what was really transformative was the ability for people to pay and make small transactions in a cheaper, faster, and more secure way. And making, I mean, think about it, the customer experience is a little bit different, but what everybody enjoys today who has an iPhone and just does like Apple Pay everywhere and so on. I mean, this is what M-Pesa was 15 years ago. It was the ability to very easily pay, and actually even easier than Apple Pay, to transfer money to people. And on top of this ability to pay, which did not exist beyond cash, and we know all the limitations around cash, but that's something that banks were not provided, again, to the majority of the population. That was the game changer, and that was used in many different ways. I mean, doing peer-to-peer payments is one thing, but being able to fraction the cost of an appliance, for instance, of a solar home system or anything else, and allow people to repay maybe $1 every week and suddenly be able to afford like $100 or $200 appliance. These things were really game changing. That's the second one. The third one was undeniably the internet, mobile internet, and I'm sure we'll talk about that. And it's not a reality for everybody today, but the fact that you have like a good 25% of the population in Africa that is using mobile internet on a daily basis from the palm of their hands and so on, that had that kind of supercharged what I was talking at the beginning about digital technology and the ability to have this two-way flow and so on and so forth. And you asked me for three, but I'll add a fourth one, which is still TBD at the moment, in my opinion, which is AI, which is supposed to be now the new revolution and what's going to bring more opportunities and so on to customers everywhere, but to African customers in particular. But when I talk about AI, I always want to remind people that it's good to build with AI, but you need to remember that a lot of people will not be able to access AI or use AI. So it's good to build for more basic mobile internet, but it's also good to build for people who still don't have a smartphone, which is the majority of people in Africa. So there's still a lot of really good service built on USSD that work with 99.9% of the phones. And it's important to just acknowledge that as well. There has been a lot of progress, but a lot of people are at the risk of being left behind if you only focus on the new tech and the next craze.
And I would like to find out, Max, so going back to the time when there was low internet penetration, right? Probably many people were not even considering Africa or the opportunity like mobile money that you've talked about that it presents. What opportunity do you think people could be missing right now in terms of Africa and where we're moving from a technology perspective?
Yeah, that's a really good one. For me, what I see as the biggest challenge is maybe a temptation to only target those who are already using and already connected and already having access, and really just only focus on I don't know, for lack of a better word, the middle class in the top 1 or 2 or 3 cities in each country, and just focus on that customer. I think there are a lot of really good models that are built around these customers, but that can't just be the end of it. And when people talk about like, Africa, 1.234 billion people, hundreds of millions of youth on the job market and so on, they're not all living in cities speaking English and on a smartphone. There's still a good chunk of the population who is not there, and for whom services are needed, and for whom those services can really be life changing. So, and again, just going back very quickly to the story of mobile money, for me, it's a really good example, because we talk a lot about fintech and so on. I mean, mobile money was the prehistory of fintech, and it's actually like arguably probably the largest fintechs in Africa are mobile money. If you agree with looking at mobile money as fintech, I think like a Safaricom, like an M-Pesa with Safaricom, or Momo from MTN are probably worth $4, $5, $6 billion today, which is higher than the valuation of any fintech in Africa. And higher than the valuation of some banks, actually. But the model of mobile money was so successful, both commercially and in terms of social impact, because in some way the use in city, which was mostly, I mean, not mostly, but for a lot of people, maybe in the middle class, was more about comfort and making small payments easier and so on, but not actually life changing. But that kind of behavior and this type of usage helped to a certain extent subsidize the usage by people for whom it was an extreme difference between doing cash or sending cash back to their family by giving money in an envelope on a bus and so on, and being able to do it directly from their phone. So there was a subsidizing by the tip of the pyramid from everybody else, basically, that was only allowed because the model was developed for everyone. And that's the kind of models that I find particularly interesting, and where I think there are a lot of opportunities.
If you are enjoying this episode, take a second to like, share, and subscribe. It helps us to reach more people and keep these conversations going. Thank you for your support. I like that you mentioned AI because that's what everybody tells, is the next thing. But I noticed that in your speech you are mentioning not the AI as we know it, let's say in our countries in the West, GPTs and whatnot, but more like the dumb AI, that like closed. Let's say closed ecosystem for a particular topic that can help people address, let's say, agriculture or livestock needs and whatnot. So
Yeah.
for that, I assume also the issues of data come in play, where to store them, if they are secure, who works with them. So how do you see this area developing in countries in Africa? I'm sure every country will be different. West Africa will be different in South Africa, but overall, with USA pulling their support away, they also pulled their data away, and now there's a gap. So I'm curious, from your position, what do you think is the right approach to working with data and overall in this piece of the world?
So I hear you. I hear you use the term dumb AI, and I've used it in the past, and I kind of regret it because I hope people don't get offended and don't stop there. But the reason why I sometimes use it is actually, like, back in the days, I used to use that in the context of when I was working in like cities and utilities and so on. And just basically, I was talking about smart city services, but in a not so smart environment. And sometimes it's easier to just say a dumb environment. But if we put the word dumb aside, the message is that you need to build for the reality of the user. And if your user doesn't have a smartphone, if your user cannot navigate an app, if your user doesn't have a bank account, if your user is not comfortable with written communication, that's just your reality as someone leveraging AI to build new services. So you need to just be aware of those limitations. And every market, every user has limitation, has preferences, and so on. If I go back to your question about data, the framework says basically that you need three things to be able to just like leverage the full potential of AI. There is the compute, which is kind of like the physical infrastructure, even though it's called cloud, and some people forget that it's all physical infrastructure. It's the data, and then it's the skills. And obviously, there are regions in the world that are better equipped in those three areas than Africa today. But for me, that's not so much of the issue, or maybe it is because I don't look at things from like that macro level, but I most focus on like local communities and end users and so on. And actually, like even myself, until a couple of years ago, I was just skeptical that anything could be built that would be relevant in that context. And actually, that's completely untrue. What you need to make sure is that you don't try and apply models that are just not relevant for the environment you're looking at. So if you talk about AI today, everybody talks about LLMs. I mean, LLMs are great, but I don't know. It's like the when USSR and the US were fighting about who was going to step foot on the moon first. In itself, it doesn't have a lot of value. The value of it is all the kind of day-to-day uses, like the new, in the case of space and the moon, it was like the new fabrics that were created and the new engines and so on. That's what adds value, and that can be used to create direct applications for end users. So man on the moon itself hasn't really made a difference for like the average person. The reason why I'm mentioning this, and I'm just kind of doing this comparison between an LLM and an SLM, like small language models. These can actually work in a context where you don't have a lot of data, or where you don't have a lot of compute, or where you actually don't need a lot of skills, because the models are there to use. And you can create a very efficient model with limited amounts of data, as long as the data that you have is very specific on a topic and of high quality. If you go tomorrow and you're a farmer in northern Nigeria, and you start asking Gen AI about what's happening to your crops or what to plant in the next season, I'm pretty sure, I haven't tried it, but I'm pretty sure that what you're going to get is going to be bad, like really bad. Because Gen AI is going to look at all the data that's accessible and just kind of like mash it all together and give the farmer in northern Nigeria an answer that's going to be, an aggregate of many things and not really being able to identify what is the valuable information. We actually at GSMA, we've worked with a startup in Nigeria that were one of our grantees called Crop to Cash. And what they've done is they've created a small language model where they have fed their own data from their own experience working with farmers in Nigeria, but also data from third parties, data from the ministries. I mean, the ministries have in a lot of markets access to a lot of data and so on. And the quality of the input from that SLM for a farmer in Nigeria is actually quite good. I mean, it's not perfect. It still needs to be refined and so on. But considering the small amount of money that was used for that, and I know it is a small amount of money because we had a grant funded project with them, and due to the Naira moving and so on, like they had a little bit of cash left that they used for this project. And I can tell you, it wasn't much. They didn't have particularly great skills on AI. What they had is like a small subset of data that was very, very relevant. And they were able in a matter of months to create that model, which is voice-based, because it's hard to expect your average user, your average farmer, smallholder farmers to be able to be very comfortable with written communication. It's available in English, but also they realized they could easily make it available in Yoruba and in Hausa. And it gives context-specific information. So this is why, long story, basically it's just say, I don't like to focus on the lack of data, the lack of compute, the lack of skills, but I'm much more interested in like, what are the tools available today that have been built maybe to do something much bigger or much more expensive or in complete different context, but can be leveraged with the right data, the right focus, and actually not so much in terms of compute and skills. That's the type of story that I think has a lot of potential.
There's so much that I want to pick on and double click on there, Max, because you've provided a comprehensive response. But to be more specific, it's the aspect of barriers that I would like you I would like to double click on, because we've seen quite significant progress in terms of network connectivity right now, or mobile connectivity across the continent. But we still see people not necessarily using it, or at least being offline. What do you think are barriers beyond the actual infrastructure for mobile connectivity that's keeping people offline, and how can startups, innovators, and key players that are wanting to play in that space overcome some of these barriers?
Yeah, very good question, and it's at the core of what the GSMA does. We've published updated numbers, I think, like a few weeks ago, maybe 3 weeks ago now, in September. So basically today, and I quoted one of those numbers already, but you have 25% of the population in Africa that is using mobile internet. And we know for a fact that usually using internet equals using mobile internet in Africa. It is by far the primary way of accessing the internet. Again, the middle class will have a laptop at home, but the majority of people are using their phone as the primary, or in a lot of cases, the only way to access the internet. That's 25% of the population. And the biggest misconception is that the reason why people are not going online is because they're not covered by mobile internet networks. And that's just not true. In Africa, it is 10% of the population. It's the highest proportion compared to other regions, but it's still, quote unquote, only 10% of the population who's not covered today by a mobile broadband network. And there are areas that are less densely populated. There are areas that are harder to reach. And there are also areas where if you want to set up an antenna and a network, you also usually need to build the road and also like bring the fuel every week to power the generator and so on, or bring solar and so on. You have to build the whole infrastructure. This is why we're not at 100% coverage today, because also the economic model doesn't really work for these areas, harder to reach and less densely populated. But if you do the math, that only gives you the people who are online and the people who can't be online, that only gives you 35% of the population, about a third, which means you have 2/3 of the population in Africa today who is covered by a mobile broadband network, meaning the mobile operators have made the investment, have built the towers, are also spending a lot on capex maintaining those towers and maintaining those networks, and the 65% of the population, nearly 2/3, are just not using. And that's where I come to your question, like why? But usually the first misconception I want to cover is that it's not because they're not covered. It is because they're not accessing the service that's there already. We've done a lot of research in the past now 7 years. Year in, year out, we do surveys across different regions to compare and so on. I would say there are two key barriers that come up at the top always and that are very much linked. The first one is the affordability of the handset. It is that kind of like first barrier that prevents people from going online. If you don't have the phone, there's nothing you can do. And the second one, which is very closely linked, is on digital skills. So we identified a lot of people have own a handset or have access to the handset, but their ability to use it to go online is just not there because they don't have the basic skills. So it means they either don't go online or they always have to go online through a parent or through a child and so on, which obviously very much limits what they can do online. And then you have other barriers that add to that. One is safety and security, which is both safety and security and the perception of safety and security. Another one is relevance. I mean, if you are a farmer in Zambia and there's a whole suite of online services that cater to the needs of a farmer in Zambia, this is great. That creates a good incentive for you to invest in your skills, invest in the handset to go online. But if there's nothing there but Facebook, that's probably not good enough for you to justify spending the time and the capital to go online. And then the last one is the trickier one, which is kind of anything related to mobile that has to do with the infrastructure. If you don't have access to energy to recharge your phone, that's a big barrier, obviously. But also even before owning a phone and a SIM, if you don't have access to formal proof of ID, which is the case of more than 1 billion people in the world today, in a lot of countries, you cannot go through the right KYC and own a SIM under your name and so on. So you will have quite a few of those that will be like kind of like in the overall infrastructure and ecosystem that are limiting access to people. But if I have to focus on the two main barriers are handset affordability and digital skills.
So my question is, if there are startups that work with data, but they don't really know how to use them, how to make them have a bigger impact or monetize them or whatever, they just collect them, let's say. Is there any program or any checklist or anything you guys can help them with in GSMA? Or do you guys specialize only in certain regions and certain sectors of the startups, or anybody can reach out? How does this work?
So obviously we spend a lot of our time working with the startups that we select as part of our innovation fund, because we spend a lot of time selecting those that we think are testing something new, something different, and have potential. So we don't always have capacity to help everybody, but over the years, like there are a lot of toolkits and resources that we've built that are available to anyone. Like very recently, we were on the climate side, for instance, we were working with startups on the potential of the voluntary carbon markets, and ended up like doing a lot of research for them and so on, and just created a self-use tool for any startup in a low and middle income country and beyond, actually, to just check very easily whether it could make sense for them or not. Because we've seen quite a lot of organizations just go into it without really knowing what it was, and then realize after spending a little bit of money and way too much time that it was actually not applicable to them. So we do have resources that are relevant. I personally really strongly believe in data, and this is, in my opinion, the biggest differentiator of a good startup versus not so good startup today. The startup that can collect data and leverage that data is the one that can really make a difference, in particular in an environment where data is hard to come across. That's I remember back in the days I was talking to an entrepreneur working on trying to digitize. It's funny because I ended up investing in a startup in East Africa that does that, but he was based in West Africa and he was trying to like digitize the booking for buses, for bus tickets in West Africa. I was talking with him and I was just saying, like, at the end of the day, I just told him your biggest asset is not so much the portal that you've created, because that is easily replicable and so on. But he had spent months like collecting all the data about the companies that were doing, like where they were going from, what stops they were making, and so on. I was like, that data is gold, because that data can be used by, I don't know, an e-commerce company that doesn't want to have to just hire a guy on a moped and hire a truck or a van every time they need to move inventory from city A to city B. If it's lower volumes, they might just want to put it in the trunk of a bus that goes back every day. You know, like this type of things. And at the end of the day, as I was just saying, like that data is usually the biggest differentiator. There's the talent, which I think that's where you start from. The idea is important. It's to be rooted in reality and in the needs of the user. So that's, if you don't have that, I mean, if you don't have an idea, usually you don't start. Then at the beginning, you need the right talent to be able to just like shape that idea, think about the implementation and so on. But once you've got these two, for me, the third one that comes is really the data. It's like, if you're able to collect and productize and also like leverage financially that data, that's where you can really make a difference.
Max, one thing that's very clear about your work, like if I read your bio and the work that you do, right? I think you even spoke about it. It's data, right? Like you are sharing so much useful data and information, I think, for different ecosystems at GSMA, and also the current work that you're doing, which we'll be getting into. So for a startup that's really trying to like get into these underserved markets, one thing that we do know is that coming across that data is quite difficult, right? What would be your advice? Is it that they just plan to start and begin collecting this data, or where do they look, and what's been your approach with your work as well when it comes to data?
Yeah, I mean, they have to look at where the data is. And that's the basic. That can be market data, that could be end user data, and so on. But personally, and that might not apply to all the business models and so on, but my personal advice is to think from the very beginning how you're going to collect that data and how you're going to collect, I was going to say, as much as possible. I mean, it's not so much about quantity. I mean, it's both about quantity and about quality. But that is really key, because this is something, once you've set up the systems from the very beginning, this is something that kind of like, a treasure trove that accumulates over time. You don't have to do anything. It's just your system is going to collect that data. And if you manage to keep going for a year, 2 years, 3 years, you will actually start getting not only good amount of data, but also historical data that helps you identify trends and so on. And then data on top of which you can build insights for your own business, but also like potentially build products for other customers. I mean, obviously, I've been working specifically with the mobile industry for nearly 20 years now. So if I talk about data, I need to talk about data privacy and like customer data and the rules and so on. Understand for anyone in any market, understand the rules around data collection. Understand what you can and cannot do. Understand the regulation. Keep an eye on the regulation, because it can change. I mean, certainly in the past 15 years, I've seen it change. And if anything, it's changing to more and more stringent rules around collecting data. Because if you build this into your system from the very beginning and are collecting data in a way that is respecting the privacy of the end user, abiding by the local rules and regulations and so on, that data you can use. If you're collecting that data in a kind of like Wild West kind of way, there is a chance that either you won't be able to use that data, or if you use that data, you'll be doing it illegally, but also you will open yourself to a lot of risk around trust. Because once the customer realizes that you've connected data about their transaction, their life, their identity, and so on, and you have done so without really taking care of their privacy and the rules and so on, that will harm not only your data collection, it will potentially harm your business and harm your reputation and so on. And that could be a really big issue. So if I summarize, as like, build for data collection, but do it in the right, responsible way.
Brilliant. And can you tell us more? So that's more on the work around mobile connectivity. And you've talked about data as well. Can you tell us about the big deal and how all of this fits into the picture with the data that you're collecting?
Yeah, so it's actually a funny story, because I have a really good friend of mine who I've been working, like Maxime, who I've been working on and off for, well, nearly 20 years now, because it all started when I was working for Altai, and he joined and we worked together, and we're both quite data oriented, in that I mean, obviously, like anyone, we have intuition and we like to just see what's happening on the ground to understand, but we always like to relate it to like data points and so on, because I think both of us in different environments have seen people make decisions or assumptions, say in particular in Africa where there is less data, and maybe narratives that are not always the right one, just like start with assumptions and then go in the wrong direction, end up wasting time and capital and so on, which, I mean, no one can really afford these days. And so back in the day, he joined me at GSMA when I was like setting up the first of the innovation funds. And at the time, the data we collected was actually not about startup deals. It was back in 2015. Bear in mind, there were very few of those. But we wanted to get access to put our offer for that non-dilutive capital that we were proposing in front of the right people, so local innovators. And we knew that being kind of a global program, it was going to be very, very hard. So we thought we should rely on the tech hubs to basically push that information to, again, profiles that they had already curated in the right language, with the right communities and so on. And at the time, there was a map by the World Bank that said there were 120 tech hubs in Africa. And then we started kind of rebuilding our own database with that and just saying, like, trying to find a contact for each of them, trying to find their Twitter handle. Yeah, Twitter was a thing back then. Twitter handles and so on. And we just realized that we listed 400 of them. So we found four times as many as the World Bank had found, because the research was 2 or 3 years old and things were really booming. And that's how basically we realized that if you put a little bit of effort, and I'm saying a little bit of effort because we had an intern do that for 3 months, like traveling virtually to every country in Africa, identifying the different tech hubs and so on. That was a very small investment. And in the beginning, I think for the first year or two, we kept that data for ourselves. And then once we'd used it for what we needed it for, we just kind of like shared it with the ecosystem. Some people took it and kept updating it and so on. And like kind of evaporated a little bit because it's less relevant. But when came the reason why I'm telling you that is that was particularly important when we set up the innovation fund. And then we did that innovation fund. We did 35 grants, 23 of them in Africa. And back then we were doing small grants of about on average $200,000. And we just thought, you know what, our 20-ish grants, $200,000 in Africa, we're going to be a very small fish in a very big pond. Turns out back in 2015, 2016, there were not that many people doing early stage investment in Africa. It was a community of about maybe 20 to 30 investors. And we traded very carefully back then, because we didn't want to be perceived as, skewing the market, coming in with quote unquote free money while they were looking for investments and so on. But we very quickly realized that there was a bigger need than the available capital anyway, in particular at like pre-seed and seed stages. And so that role that we were playing and others were playing, and then a lot of different organizations played in kind of seeding innovation in Africa, was recognized as being important and not really seen as a competitor to the VC ecosystem that was building up. And so we built those relationships and then ended up getting really good visibility on the different deals that were being made in Africa. And again, I mean, with the exception of the year where, like, of the Jumia deals, which were a lot of money, like 2015, 2016, 2017, we're talking about a few tens of millions invested in startup in Africa, like a manageable number of deals. And then we saw that growing, and Maxime in particular started collecting the data in 2019, just saying like, why don't I put all that data that I'm seeing everywhere from those sources that investors are sharing with me into a database? And then it started building, again, build a treasure trove of data. In the beginning, like setting up that system was easy. Finding the information was easy. And as the number of deals and the amount of data grew, you build up on a system that exists. Like if you had to start today and build back a database, our database has 4,000 lines today of deals, build it back to 2019 to identify all those deals, that would be extremely complicated. I mean, someone told me the other day, ChatGPT could do that in a couple of hours. It's like, I would say good luck with that. I would say it's probably worth paying $190 to get access to our database rather than to try and use ChatGPT. It would make a dog's dinner out of it. But again, here it's about building the data, and as the value of that data comes over time. The first year, the first couple years, not so interesting. When you start collecting for 2, 3, 4, 5, 6 years now, that's where you identify trends. And that's where, for the people who use the data for their own fundraising, whether they're funds or startups, but also for anyone like researchers, journalists, and so on that want to identify trends in the ecosystem and so on. In both cases, that becomes interesting over time. And so we had this conversation with Maxime back in 2021. We said like, okay, now we have 2 years of data. We can start looking at trends and so on, which is my skill set. His skill set is ability to find all that data. I do not have that type of patience. My skill set is looking at a big Excel and trying to make sense of all these numbers and say like, what are we seeing? What's hidden behind the numbers? And so that's how Africa the Big Deal was born.
So, what did you find behind the big numbers? It's like a good story, no? Unfolding in front of our eyes. So, if you are enjoying this episode, take a second to like, share, and subscribe. It helps us to reach more people and keep these conversations going. Thank you for your support. Maxine put all the numbers together. What did you find?
Yeah, and you know what I love, by the way, is the fact that we equally learn, by the way, on the podcast, Max. So this is very interesting. So we want to find out, yes, what are some surprising changes that you've seen or insights over the past few years working with data?
And please don't say fintech is big, because that's
fintech
out there.
Is big. Yeah, fintech is big. It's like 40 to 50% of the money that was raised in the past 6 years went to fintech, but everybody knows that. No, there are probably two key learnings for me. One is, I don't know if I want to use maturity or sophistication and so on. But what we're really seeing year after year is that it's not every year, it's not always more money. I mean, the past 2-3 years have been a bit complicated. So yes, you still have like year-on-year decline in some cases, but the level of expertise and the quality of that money and the quality of the businesses it goes to keeps getting higher and higher. I think for anyone who thinks that the startup and the VC ecosystem in Africa is anything to be compared to what it was 5 or 6 years ago, they're absolutely wrong. I always use like a few examples. One of them, I think for me, the one that speaks the most is debt. I mean, 6 years ago, for a startup to raise debt in Africa was extremely complicated. The banks didn't know how to do it. In a lot of cases, they still don't. And the traditional VCs, the few dozens that were there, were focusing on equity because that was their model. Now you have a good number of not only of African specific funders and VCs, if you want to still call it, investors, that do debt specifically in Africa. I'll tell you, for instance, we provide technical assistance to the different startups that are in our innovation fund. Back in 2016, 2017, it was really still a little bit basic. Because of our proposal, our offer was basic, but probably because the need was basic. It was about like, how do you pitch your organization? How do you approach an investor? How do you approach a partner, and so on? The last cohort that we did, which is like, we're almost not doing that anymore. We're doing an hour about the basics because it's good to remind people of the basics. But now what we got is we get consultants to sit with them and help them identify not how they were raised, but how much money they really need. What type of money do they really need? Like, you don't raise equity to fund your inventory. That doesn't make sense. When you can have access to debt, that makes a lot more sense. A few years ago, there was no access to debt. So we've seen startup like raise equity to finance like inventory, which didn't make any sense. But also, so identify the amount, identify the type of funding, but also identify the investors. There's enough depth in the ecosystem of investors in Africa today to just say, okay, you need this much in equity, you need this much in debt, but also this is like the one skill that you need, or the one type of customers you need access to. So you need to aim like for the 3 VCs or 3 CVCs that will give you that. So that kind of level of granularity and expertise, this is why I use the word sophistication. Like, it's not just, and actually, in terms of collecting data, it becomes hard because in the past, you would just do one line because it was a fintech doing a 5 million equity round. Today, you need to have like 2 lines, sometimes 3 lines, because there will be 3 million in equity and 5 million in debt. And there might be like $500,000 in grant on top of that from a DFI or from a grantor. And also, it becomes really hard to put everybody into like a fintech box, because fintech is everything and nothing. You have fintechs replacing banks, you have fintechs doing insurance, you have fintechs doing like fintech specifically in an agriculture or in a health context and so on. And that level of specialization and sophistication, I think, is the one thing that's really like been changing in the past decade, but in particular in the past 6 years, I've been looking at the data. The first one. The second one is at a much more macro level. Probably the biggest misconception that I fight from people who, I was going to say, are maybe less aware of what's happening in the ecosystem, but I would say generally speaking, for people who don't look at the data, is that the trends in Africa are not that different from the global trends. And if you look at the graph of what, obviously you have to change the scale because Africa is still below 1% of global VC, which doesn't make any sense if you compare the size of the opportunities, population, GDP, and so on. But anyway, if you look at the graph of the funding in the past 6 years, our data for Africa, and we use CB Insights data for global trends, they're exactly the same graphs. It's like you had a boom of about a year, then you had a decrease period of about 2 years, and now things have stabilized. And in the past 6 months, it seems like it's starting to go up, but in a much more rational way. I would say with two exceptions. One is that actually, if you compare, obviously relatively, but like for like with the world generally speaking, the peak went higher for Africa, and the decrease was not as bad as for the rest of the world. So Africa is not only following the same trend, but it's actually benefiting more when things go well and suffering less when things go bad. And the other thing that is very interesting is when I say those two graphs look the same, it's actually not true. They look the same with a 6-month lag. It's almost eerie, as like, if you want to know what's happening in 6 months in the ecosystem in Africa, you need to look at what's happening globally, which is I mean, 2/3 is driven by the US today. But with those two exceptions, the trends are exactly the same. And I think for me, this is the biggest misconception that I fight, that people just think like, oh yeah, Africa, different context and so on, so must be very different trends. Actually, no, Africa is just aligned with what the rest of the world is doing.
And what do you think is driving the misinformation or disinformation? Because if the trends are kind of like similar, then why do we still have these narratives as though there isn't much growth and opportunity in Africa?
I think you have two different communities. You have the people who are active and interested in what's happening on the continent, and there are a lot of very good sources. I mean, not just ours, obviously, but there are like a lot of good conference, there are a lot of good media out there and so on, and where you get like, again, 10 years ago when you had an article about a startup raising in Africa, it was like very high level and so on. Now they just tend to list like 5, sometimes 10 investors. They just remind you how much was raised in the past and just gives you that granularity between debt and equity and so on. So the data is there. And I think for a lot of people who are active in the ecosystem, they know the data, and their knowledge of what is happening is like getting more and more precise. I think it's for people who look at the ecosystem from a distance, or maybe just from time to time, that can sometimes be taken in one direction or the other based on preconception or based on a very high level article that they might read in like global publications, where you don't always get that level of granularity and so on. But we see this changing. I think we're seeing new media emerge that give a view of what's happening in Africa that personally had never seen before, even from like Africa specific publication. We've got good ones. I'm lucky enough to speak French. Like Jeune Afrique has been for a very long time covering what's happening on the continent and so on in a lot of depth. But I want to mention Semaphore, for instance. Like they were not born out of Africa and so on, but with Alex and Yinka, they are putting together like articles and analysis of what's happening on the continent that is of very high quality. So all it takes is for people to invest the time in really going beyond what they know and their misconception, and there's a lot of good data out there. The problem is today, Africa is a growing part of the world population. It's still, depending on whether you look at GDP, GNI, and so on, like 2, 3, 4, 5% of the global economy, and below 1% of like VC activity. So when you have a VC maybe operating in the US and in Europe today, and they think, where am I going to look next? Might be more tempting to just like try and crack China or Japan or even Latin America, even though the volumes are comparable to Africa, then Africa, because again, it's not one block, it's 54 markets, it's complicated, they don't have the networks and so on. So I would say anything that builds the right narrative and access to information rooted in data and quality analysis helps over time.
I also noticed that if there is data, it's usually on the investment side. How much money was invested in what phase of the startups, but it's very hard to find anything on exits. I get that you are collecting money from 2018, 19, so it's been 7 years on the older startup that you got there for. They might be still operating, they might be still fundraising, not really exiting.
Yep.
But do you see any trends? Because I noticed that some markets are trying to build like IPO version, for their own like stock market. Some are doing private equity purchase or like buy-offs. So what do you see in the data? What is the story? What are the most likely ways how to make profit for the investors themselves?
No, I mean, the exits is what keeps investors up at night. That's, I mean, the whole VC system is based on exits. If you invest but can never exit your investment, that's not going to work. It's much harder to collect that data. I mean, what we do is we started, I think, 3 years ago now collecting data on exits, but it's really hard to get valuations. unless the valuation is really good, and you sell your company for $100 million, usually it's a lot harder. We've also, I mean, and this is not something that we can quantify in the database, but we also know that some exits are kind of distress exits as opposed to success stories. And it's not up to us to just qualify what's a good exit from a bad exit. But generally speaking, yes, that's the question today is how do you build the next part of the story? But again, it's only been 5 or 6 years when the numbers have been like over $1 billion a year invested in startups. So if you compare it to other markets that might have reached these numbers like 2-3 decades ago, it's normal that it takes time to just build the pipeline and build the exits and so on. You were mentioning IPO. I mean, it's hard to come by an IPO today in the tech space in Africa, because you don't have a lot of organizations that have reached that scale. And also not all the IPO stories went really well. And there's also, I mean, when you're having conversation with investors, there's also kind of question is like, an IPO is good, but at least from a story and message perspective, the perfect IPO is one that happens in like Johannesburg or in Cairo, as opposed to London or New York. But at the same time, I would say if a startup in Africa or anywhere has done so well that they have the opportunity to list on the New York Stock Exchange, that's probably the right decision for them. But for the ecosystem, it's a harder message to convey. There's actually there are a lot of conversations at the moment as well around like where companies are registered, and the fact that the vast majority of the holdings are registered either in Europe or the US. Is it a bad thing? Is it a good thing? If it helps attract investors, maybe that's a good thing, but at least on paper, you would want an African startup to have the opportunity to register in 1, 2, 3 good African location, and that not being an obstacle in the future from them raising. So there was a lot of debate. I think it was back in 2020. Was it 2018 when Jumia listed? I mean, the whole conversation for weeks, a month was Jumia an African startup? Because yeah, the developers were not based in Africa and were not African. The key staff was not African. They were listing on the New York Stock Exchange and so on. And if you look at Africa, the big deal, I wrote 200 posts in the past 4 years. I don't think you'll find a single one when I talk about an African startup. It's always startup in Africa, because at the end of the day, I think this debate is very interesting, and it really like crystallized a lot of thinking from like very prominent people in the ecosystem. And I think that dialogue was healthy and is still healthy. But from where I stand, I do not have anything to add here. I'm not going to decide who's an African startup and who isn't. We look at startups that are active in Africa. We explain the criteria why we select them or not. But then again, people can get access to the full database. And if they want to do the analysis, removing so-and-so because according to them, they're not an African startup, this is something we actually encourage. And if they find different trends, be very happy to outline those. But to go back to your question, yeah, the idea of just creating those exits, more PE, more opportunities for listing, ideally on African stock exchange and so on, it's what's going to probably make or break the ecosystem in the next 5 years.
You spoke about, say, Johannesburg, the London Stock Exchange, right? And these are different ecosystems. And that's the current reality for Africa. We have more than 50 countries on the African continent. And so we have different ecosystems. And one thing that we know is funding is clustered in the big four, right? Your your South Africa, Nigeria, Egypt, and Kenya. What would be some tactical advice that you would give founders that are in less funded markets that are looking to fundraise and access capital?
Yeah, so a number behind what you were saying, roughly in the past 6 years, it's somewhere between 80 and 85% of all the funding that went to startups in Africa that were focused on 4 markets: Nigeria, Egypt, South Africa, and Kenya. Actually, it was a tongue slip, but the reality, it's probably focused on 4, 5, or 6 cities on the whole continent of 54 countries, 1.x billion people, and so on. I'm very wary when I'm asked this question of anything that could sound like you should move to Nairobi or move to Lagos. Personally, I believe that one of the key risks for the ecosystem is this hyper concentration in 1, 2, 3, 4 markets that deprive the other 50 of their talent and their opportunities, and so on and so forth. So my advice is more for the rest of the ecosystem of how do you make it attractive enough for someone who has a good idea, a good team, good understanding of the problem on the ground, I don't know, in Bamako, in Douala, to not have as a plan to get out of the country and taking with them the money, the talent, the capital, the ideas, and so on. So it's more a message, and we've seen that we've seen actually some of the investors, for instance, do this job. Launch Africa is notably probably the biggest example in their fund one. They did somewhere around 150 investments in more than 20 markets. That was completely unheard of compared to other investors usually just picking 4, 5, 6 countries, because it's hard. Because every new country is understanding the local, like building a network, understanding the local environment, and so on. So it's not easy to just add a country to your list of countries where you invest. So the investors are doing their share. They could always do more, but they're also guided by returns and finding exits in their first funds. The governments have a big role to play, in my opinion. It's both about setting the right environment for a local startup in a tier 2 or tier 3 market. Sorry, for lack of a better word, that's how I'm calling them. Just saying, like, creating a business, filing your taxes, understanding the regulation is not going to be so complicated that either the entrepreneur or the investor will just not even look at your market. So there is a strong incentive, in my opinion, for all the digital economy ministers and so on that are building startup acts, and I don't know, I have conflicting views on startup acts, but at the end of the day, I think they send the right message. They need to be the content of the startup act needs to be good, but even just sending the message of just saying, like, as an economy, we look towards startup innovation, attracting capital, technology, and so on as something of value for the ecosystem, and therefore we're ready to work with the local ecosystem to create the condition for growth and like training and attracting funding and so on. I think those are important. At the end of the day, it's also about acknowledging that some of the really good stories are coming from outside of those big 4. You have really good startups doing very interesting work, and in some markets it may be 1 or 2 that are getting most of the attention and most of the funding, but you do need those local champions as well, and you need to make sure that they can be rooted in the local ecosystem and accept that as they grow, they might grow out of the ecosystem, but it will pay back. I mean, for me, the biggest example is InstaDeep in Tunisia. I mean, we're not talking about, like, what they did is not just like incredible in terms of speed, quality, fundraising, visibility, anything, any criteria you look at. It's not just incredible for an African startup. It's incredible for a startup, full stop. Like, their benchmark on global AI startups. I mean, AI has gone through a lot in terms of funding and so on in the past couple of years, but when they sold to BioNTech, which was, if I'm not mistaken, beginning of 2022, 2023. Sorry, I'm sometimes getting my years wrong. But before the whole chat GPT OpenAI raising tens of billions, what it seems to be every few months. That story is a very important one. It is Tunisian engineers. It started in Tunisia, but it's a global use case. It's something that is operating on global benchmarks and so on. And I know, because I was in Tunisia not so long after the news broke, and there were some voices on the ground that were just saying like, yeah, it's a shame because they moved their headquarters to the UK, and is it really still a Tunisian company? It's like, do you think the DNA of the founders changed the day they moved to the UK? Do you think if tomorrow they have money to invest, they will not invest at least some of it in Tunisia? Do you not think that they have an incentive and a willingness to just uplift local talents and so on? It's like, but it's hard. I understand, and maybe that would be my last point because I'm starting to babble. I understand that for an ecosystem, it might be troubling because the fact that, I don't know, a CEO that does well moves to the US or moves to the UK, gets money, and then will launch their next startup and so on. The time for it to come back to the ecosystem in terms of money, talent, visibility, credibility, and so on is a medium to long term view. The problem today is that a lot of people are looking at the short term view. The customers are trying to make ends meet. The politicians are trying to stay in power. The entrepreneurs are trying to raise their next round, not to go out of business. So it's hard to reconcile the two. But I know that in some ecosystems, in particular, I was going to say the smaller one. No, the 50 out of 54 that are not the big four, it sometimes can, like an economic setback and so on can look like a big deal. And it is a big deal at a micro level and at a now level. But overall, that story is built over time. I'm convinced that the story is moving in the dynamic is the good one. It's just, the patience is hard to accept and to learn, and take that as someone who's not particularly patient.
I have to say that a lot of it reminds me, Czech Republic, because we were a communist country. There was no capitalism here until 1989, right?
Mhm.
So afterwards, everybody had that entrepreneurship back in them because for 40 years, people couldn't do nothing. So then they started doing SMEs and slowly startups because internet, was discovered or like invented or whatnot. And now we are in a phase where we have like this first to second generation of founders who are they investing in the new coming founders.
Mhm.
So exactly what you're saying. It's a long-term view. We are so far away from like any startup laws. This year they just passed ESOP is a like employee stock option is actually an option, and not you don't have to tax it right away. So the legal system is way behind of what is actually happening on the ground. So I just want to confirm. It might take some time, but there must be the first generation, and from the generation, even if 5 big startups succeed, they will invest back. Look at Estonia, look at us, look at other countries that were dictatorships for 30 years and couldn't have a capitalistic society. So it works. This is proven by history.
Also, you've used a very important word. You've used the word SME. And I mean, here we're talking about tech, we're talking about like growth, about unicorns and so on. I've talked over the years to hundreds of businesses, and a lot of them clearly didn't have a market big enough or an idea bold enough and so on to become a unicorn, or even to potentially raise like a Series A in the future. But they had enough to be a good local SME to just get 5, 10, maybe if they do well, 20, 25 staff. And those people need a lot of attention. They are the one building the foundations of the economy. And I mean, at the rate where things are going, the startups are not going to be the answer to the lack of job or the number of people coming to the job market in Africa or anywhere else. It's just about, and I'm glad you used that word, because in any conversation about startup, I think it's important to remind that talent should not be encouraged away from creating a good local SME when that's the skill and the idea and the access of capital that they have, but also that investment, and that's not a job for VC. Banks are not always very good at this, but investment should always also not be taken away from bringing the small level of capital to local SMEs that can make a really big difference. I always remember back in 2016, I was at a startup conference in Benin, and at the end, it's probably one of the best questions I got at a conference. A guy raised his hand and he said, like, I set up my garage 5 years ago. I have 3 employees. I get more requests than I can manage. What I need is like, I need $5,000 to be able to recruit 2 more people and buy kind of like the machine that I need and so on. I can't find a bank to do that. And that's a shame because you have a business that's working, that can create job, that needs very low level of access to capital, and that will create jobs that are jobs to stay in the local ecosystem and will create opportunity for people who might not become like, I don't know, entrepreneurs or CEOs or anything, but you need to build for everybody. So thanks for talking about SMEs.
I think on my end, I just wanted, especially touching base on the SMEs, and this will be my final question because I'm being mindful of time. I saw in the September deal report that you shared, there was something interesting there. There was one not so tech startup that we had. I think it should have been Pura Beverages that raised about 15 million for their Series B, and it was kind of like an SME looking towards VC funding, and that was interesting. My question was just around this year specifically and what we're seeing from a funding landscape. I think we're now just shy of 40 million from what was the total investment from last year's deals. I just wanted you to speak to maybe what that trend is looking like and what's really influencing the growth this year in terms of the funding landscape.
Yeah, that Pura Beverage case is very interesting. I had as usual, when I start looking into the data, I have conversation with Maxime and says like, should this really be here? And he says like, I agree, this is not tech, but it's very unusual because they used a VC approach. I think their Series A was led by Knife Capital. They got funding initially by Knife Capital and so on. And it's like, okay, it's interesting enough. It's not going to move the needle one way or the other, and it's interesting enough to be kept in the database. Then again, anyone who does their own analysis can decide to remove them. But just to show that, yeah, a non-tech startup can look at VC investors when they have, I mean, good metrics and a good model that could attract VC funding. Why not? To come back to your point, yes. I mean, by the time people listen to this, 2020 startups in Africa will probably have raised already more in 2025 than they had in 2024. I mean, obviously, there's a lot to unpack there, and in some markets it's better than others. In some sectors it's better than others. But at the end of the day, it's you need good messages as well, and this is a good one because 23 was less than 22, 24 was less than 23. I think it'd be good to just be able to say it's not the third year of decline, even though it very clearly mirrors what's happened at the global level. If you look at the numbers, like I encourage you to look at the latest CB Insights report and open the pages on China. Last time I looked, I was shocked by what happened in China in the past 2-3 years. There's still obviously a lot happening there, and we're still talking a lot more than what's happening in Africa or the average African market. But I mean, they took the hit, and a lot of markets did take the hit. So, and I'll insist on going back to maybe SMEs again here. I like those models that target SMEs, and I think SMEs is you can define it very broadly. I'm tempted to define a smallholder farmer that does more than pure subsistence agriculture, in particular as an SME. They work there, they might have like temporary help during the year or have family member helping and so on, but they're basically trying to create some kind of revenue, livelihood, and so on, and grow out of just growing the food that they need for their family. And all the services around, the second pen that I dropped now, all the services that are built around access to productive tools, access to capital, access to, I don't know, climate-based insurance and so on. These are all areas that probably weren't talking, not probably, we weren't talking about 5 years ago. And today are really growing into the kind of subsectors and so on. And I think that's particularly interesting. So again, the story is a story of maturity, sophistication, depth, and it gets harder and harder to just put a deal or a startup into a box because they're all answering very specific needs, and the level of, again, like data-driven decisions from the design of the solution to like the growth strategy and so on, the level of skills from the average entrepreneur has grown tremendously in the past 10 years that I've been working with African entrepreneurs. So we'll keep seeing great things. I'm just hoping that at a global level and in Africa in particular, the money will keep coming to fund those solutions, big and small.
Thank you, Max, for the insightful conversation, because as you can see on us, we have a bunch of more questions and we can argue who is going to ask the next one. But we ran out of time, and we hope to have you again sometimes soon, maybe next year, to talk about 2026. How did it go?
Happy to.
And before 2026 happened, where can people find you? Is there any websites you want to send them to, and any data they should track?
For anything Africa the Big Deal, it's easy. Just go on Google and put Africa the Big Deal, or go on LinkedIn, Africa the Big Deal. I love to learn and I love to share. So if you go on my LinkedIn, you'll find a lot of content as well on topics that are sometimes completely unrelated. And I love when people just send me their own article, their own analysis, and so on. We always encourage people to come up with ideas of looking at the data and so on. So I would just say, look for my name on LinkedIn and Google Africa the Big Deal. And for anything GSMA, that will be gsma.com/M4D for mobile for development. And that's where you'll get all the content.
Thank you. And Max is too humble. Don't forget to follow and subscribe to the Substack, the Africa Big Deal.
And it's free. Doesn't make a difference. And sometimes I just realize, like, oh, this person's subscribing now. Like, why only now? It's been like 5 years, and I know they know about it. Just you get an email a week. That's not a lot. 12,000 people have already subscribed, so it's going to enough mailboxes already.
Since yesterday, I am one of those 12,000. So I'm sorry, I just did it now.
Never too late.
Thank you so much, Max, for that insightful conversation. We really appreciate your time. And
thanks
to our listeners, please remember to follow Max for more insights, Africa the Big Deal, for more even in-depth insight and analysis on what's happening on the African continent. As you know, on the podcast, we want real information, success stories about Africa that paint and show what's really happening on the ground. And I think Max has done a great job to just show us what's happening on the African continent. So thanks so much, and we'll see you in the next episode.
Thank you for joining us on Beyond the Pivot. Remember to subscribe, follow, and share this episode with anyone passionate about Africa's future in business. For more stories and extra resources, visit tambotiseko.com. Until next time, keep pushing boundaries and shaping the future of African entrepreneurship.